Hi guys, this is going to be a webinar on Elliott wave and harmonic patterns. It's something that I've been working on. I've read, I think, most of the Elliott wave books, all the good ones, and I'm sorry to say I've read also the bad ones. Um, So I'm kind of okay with all the Elliott wave theory, know it by heart, back and forth, and also all the harmonic patterns from Gartley to Scott Carney's book with all the patterns, also Wolf wave and I've been trying to combine the two. Basically, try and understand if I see a pattern, is it a bullish one or a bearish one? How much risk should I be allocating to a trade, if it's a Gartley or if it's a BAT or if it's a cipher or if it's an ABCD or whatever, uh, and and I try to combine the two, basically trying to see which patterns would appear on each area of Elliott wave theory. I haven't seen this in any book. I haven't seen in videos about this or uh, books or courses. Um, it's something that I've been developing. I'm not going to say that it's original because I don't know if it is, but I'm happy to say that's something that I've been working on, and I I have been creating this. I'm sure that there's some things that are similar, but well, I don't want to take all of the spotlight from other people that have been working on this. So I'm not going to say I invented it, just something I've been working on and I haven't read in any book. So let's try and not take too long. This is not supposed to explain everything. It's just to give an eye opening to so that Elliott wave traders can try and understand and figure out well, if it makes sense to go long or short, or if it makes more sense to let the pattern unfold and wait for the next one. I'm not going to explain all the Elliott wave theory. That I have a video explaining 2 hours or 3 hour video explaining how to find the waves. So I'm gonna use that video as an introduction to this one. So let's say that whoever's watching this knows a little bit about Elliott wave. So Elliott wave is made of 5 waves. Let's call it 1, 2, 3, 4, 5, and then each wave has smaller waves inside. The way I try to predict the movement is the first movement I try to have it come over to the 61.8, and then the next movement I use the extension tool and I wait for it to go to the 161, and then I use this wave, this whole structure, and wait for it to come to the 38.6, 38.2, That would be your wave 4. Look at using this these wave 1 and wave 4 do not overlap, and then the extension for wave 5 is usually up to the 127, and it makes like wave 1 and 5 almost the same. So this is the basic structure where of Elliott wave, and then you have a correction, usually A, B, C, D, and all of this began because of this correction, because this was most of the time this was obviously a Gartley pattern. So this would be a Gartley pattern. So, and I began to try and understand, okay, Gartleys happen here, but also they happen here on a lower scale. You're going to see this on a PDF presentation. They also happen here, and then the ABCs can happen here, here, here. So I began looking at each pattern. Where can I find them? Where can I find the each pattern? Let's just erase this and go. I have here a natural gas chart, and we're going to use that as our example. So let's pull it up. So this is natural gas, and I have here two structures of wave, one beginning here and ending here, and the other beginning here and ending here. And I want to show you just how it works, those Fibonacci levels. So the first one would be using the wave 1 and waiting for it to hit 61.8, which doesn't happen here anyway, but it looks like a wave 1. Wave 3 is it's a big impulse. So using the extension tool, we would do the same and look for the 161.8. It happens there. So that works as the basis for my presentation, my analysis, and then we wait for the ABC down to the 38.2. It doesn't touch it, but it gets close to that, and then the extension to 127, and it goes, well, almost to the pip in this case. But let's begin to merge patterns in Elliott wave. So these are all the patterns you have, bullish and bearish. The most important pattern, or the basis for many other patterns, is the ABCD pattern, and it's very easy to find, and usually because it's symmetrical, it gives you a low risk entry. And then the Gartley is very powerful, but the Gartley is really ABCD with an impulse before it. So you have an impulse, then you have an ABCD, and then you have another impulse, bearish, or and then all the variations, the bat, the crab, butterfly, shark, wolf wave. It's interesting. Then double tops, head and shoulders, and so on. So I'll explain the way that I just explained, but I'll show you here on the PDF file all the levels. So this would be the main structure of Elliott wave, a bullish and a bearish. Each one is subdivided into other waves, and you see here time usually it's not symmetrical. Many times we see the waves having the same length of time. I mean, probably they draw like that to have it fit the books, the pages, and but well, wave 3, I've seen it many times. It takes much longer than wave 1, and so on. So these would be the divisions of a main structure. And then, as I showed you before, we have the Fibonacci levels, coming back to the 61.8, then using the extension to the 161, retracement back to the 38.2, related to this point, the 100, 0, and then the extension up here somewhere. Here I'm using symmetrical waves in the 1 and the 5. So these are this is the main Fibonacci for the retracement. This is the extension. This is the other Fibonacci for this retracement, and then for the and so on. And now this is where it gets interesting. This is where you will many times see ABC patterns. Wave 4, either this one or this one, might have other structures like triangles or pennants or whatever, but you can many times find it ABC patterns on these areas. And here, for example, you have an ABC pattern where you have the whole structure of 5 waves down, ABC up, and then 5 waves down again. So let's look at this in this wave count. So ABC pattern, you could find it here as there's one. Another one could be this one. Another one could be this one. So and this is interesting because this was the basis of everything. This 4 of 5. So you get it many times. So this is something to look at, and if you guys are looking to count waves, these using harmonics and Elliott wave, it really can help you count and know where you are. So if you have an ABC, it's pretty clear where the move is going. So let's look at another one. Gartley pattern. Well, I just told you that Gartley many times happens on wave 1. Here, if we count the wave from beginning here, it really doesn't happen on wave 1. But if you count from this low, then you do the ABC, you get that 68, 70 retracement. Let's look at another one. This wave 5 also looks like well, it isn't really, but well, let's see another one. This is not supposed to show everything. It's supposed to just open the eye so you guys can start looking for the patterns in different areas. So the Gartley would be those areas there. The bat pattern was this that I tried to do here. It ends up being the C wave because well, the structure is different. Crab patterns also. Here it's not the same pattern, but because the levels might move, you can find it here, you can find it here, where the end point is lower than where was it? Oh, we changed this. Why did I change this? Natural gas. Like this, we saw here that the end point goes lower than the start point, like this. So this is a good pattern to trade, but there are also, I found out that there are patterns that they're not so good to trade, because the butterfly usually leads you into a correction. So it will rarely get to that. In this case, it will rarely get to that lower low, and here to that lower low, because it makes a different pattern. So butterflies are not, in my opinion, good patterns to trade. Sharks, the same thing. So let's see if we can find here a shark. These patterns are kind of inverted Gartley. You see the ABC it's at a different level. So we could have a pattern like this. And it leads you to a correction. Here in this case it does get to the lower low, but if we do, well, if we grab this, well, I'm doing this on the fly, so butterflies and sharks don't really lead you into a big trade. The cipher is kind of similar to Gartley with different levels, so it does work. And the wolf pattern is quite interesting. It gives you precise time and place to exit the trade, a good target. The three drives also, double tops and triple tops, head and shoulders, and these are the tricky ones. When you get a wave 3 of like in this case a wave 3 of 3 and 5 of 3 that have similar levels, and then you get a correction and you're going to enter on the break of the neckline, and you really don't have a lot of room to make a good trade out of this. So having being aware of where the head and shoulders is happening, it really helps you protect yourself. I mean, if you're entering on a head and shoulders on this, on the reversal on a lower time frame in the 5, it's okay. But if you're entering on a reversal pattern on a head and shoulders, it's really just it leads you to the end of the correction. It won't give you the symmetry of the size between the head and the neckline. So this is something I've been aware of. I also published, I remember publishing several head and shoulders and saying they were fake, and then they ended up being fake. Well, and this would be all the harmonic patterns in the Elliott wave. So I hope this was interesting. It's just an eye-opening opener, so you can try and see where on the count you are, and I suggest using as a basis the ABCD. If you see an ABCD, you're in a correction. If you see like a 3 drives pattern, you're leading into a correction, like this 1, 2, 3, 4, 5. You're leading into a correction. Wolf wave patterns are interesting. You see, you have 1, 2, 3, 4, 5. You draw the trend lines. Usually the 5, the 5. I'm using the numbers, but this is not Elliott wave. This is a pattern. Usually 5 goes over or under the trend line, depending on if you're bullish, and then the target is the connection between wave 1 and 4. So in this case, you'd have an entry there and an exit somewhere around here. It's a good pattern for you guys to look at, and understanding where it happens on the Elliott wave, it can help you look for a big correction like this one, or a smaller correction like this one. So that was it. This is my baby. It's something that I worked on. This probably doesn't look like it took a long time to make, but it really did. It's many books that were read that led into this, and that's it. I just wanted to let you know that you can use harmonic patterns to let you know in where you are positioned in relationship to the Elliott wave. So hope you enjoy. Feel free to give me feedback, or ask stuff, or suggest other themes for other videos. Good trading, and hope you're profitable.